Okay guys, so welcome back to this very quick video on how you can trade an SFC entry model. So this is a very quick video, what the fuck. So this is a very quick video because I'm gonna have to get out of this room and go to my home and meet my family. So they live somewhere else. I have to like freaking travel tomorrow. So I was actually thinking to make a whole like lengthy video, so I could explain you guys a lot of things, but for this video, I'm going to explain to you basically how to trade that 3 candlestick pattern. So without any further ado, let's fucking get into it. Are we okay? Are we recording? Yeah, okay, we are recording. Let's fucking go. So I normally trade on gold. You can use this anywhere. It works everywhere. I've tried everywhere. I just personally love gold, so that's why I trade it on gold, and I trade on Bitcoin as well. So here's the first thing. Do not ever use this strategy blindly. And also, oh yeah, before, fuck, I forgot. Disclaimer, guys, I'm not a financial advisor. This is not a financial advice. This is just what I do. And yeah, I guess. So now let's just freaking get into this, okay? Let's just not waste any more time. So this is the daily Bitcoin chart, and let's go to the first on the 4-hour time frame. So the 3 candlestick pattern that I talked to you about in the reel has a lot of formations in it, okay? The 3 candlestick pattern has a lot of formations in it. I'm going to repeat that again. So I'm just going to show it to you. This is the first one, okay? And this is the major one that I really like to freaking trade. This is also a 3 candlestick pattern. And can we find anyone? Yep, this is also a 3 candlestick pattern. And where do we have here? Yep, here we are. This is also a 3 candlestick pattern. Pretty bullish. Yeah. See, so in just how much time? In just oh shit, 22 days. Oh, never mind. Okay, because it is on 4-hour time frame. So as a beginner, I would suggest you to first watch this. I normally use this on the 1-hour time frame. And then I also use this on 15-minute time frame because it's also accurate there. So yeah, it's not a big deal about the time frames, but yeah, it's really good there. So let's just start with the higher time frame so that you guys can actually learn it on higher time frame and try to use it. Now, as you can see that there's a lot of formation for this, okay, a lot of formation. But the very first thing I want to tell you guys is that do not ever use this blindly. Any bullish 3 candlestick pattern or any bearish 3 candlestick pattern does not mean that price is going to go higher or price is going to go lower. It just gives you a clue that, hey, like for example, like this pattern over here gave me a clue like, hey, from here I might go higher, okay? And this is such a strong thing because sometimes I don't even care how the market structure is going or what overall market is doing. I just don't care. I simply look at this and I'll be like, okay, first candle, second candle, third candle, and the fourth candle from this open, I'm expecting a bullish candle. But that did not happen. And I can take a short entry on this when that did not happen. So this is what I do. This is basically a conditional trading, a two-way trading. So in the normal trading world, this is just a simple thing. So there guys are like, okay, this pattern, this fair value gap thing, this bullish order block, this is gonna put price higher. So we are only gonna trade if price moves higher from this with a good confirmation. And I'm like, okay, that's fine. That's pretty good. Nothing bad in it. But how are you like, it's obvious. If it's not going to go higher, then it's going to go lower, or it can just freaking consolidate. I mean, 3-4 things, nothing else is going to happen in the markets, right? There are not a lot more possibilities. It's not like Doctor Strange and Avengers, like not a billion possibilities. Either price going to go high, very simple thing. Either price going to go higher or either price going to go lower. That's about it. But the benefit of these candlestick patterns, as you can already see on your you cannot see on your skin, fuck my English, bro. As you can already see on the screen, the benefit of these candlestick patterns is that whatever movement we are gonna get, it's a really good movement in that particular direction. So take an example from here, like bearish candlestick pattern, price went down in 1 candle. Bullish candlestick pattern, price went up in 2 candles, fair enough. And then this, and then price kept going down, and then this, and then 1 candle, and then second higher, and then this, and then the first higher. This is what I call the Juni candle, but I've already made this in the PDF that I provided you guys in the Telegram, so go check it out that as well. So yeah, now once you already know what we can do with this, let me actually show you how to trade with this, okay? It's very simple. It's a conditional way of trading and it's a two-way of trading. You never predict, you never react, okay? A lot of traders teaches you to react in the market. That, hey guys, whenever you see this, do not ever predict. Very good, now you should never predict, but react. And I'm like, reaction is also a bad form of, I don't know, like kind of a prediction, because if you are reacting to everything, then I mean, to me, it just doesn't make sense. Maybe I'm, because of English is not my first language, so I'm not able to explain the concept, but I don't like to react. I like to respond. And the difference is reaction is based on a certain expectations. Like for example, from here, let me just freaking mark this. So let's say from here, this is a support. Okay, oh shit, support is not right. Support is green. That's what she said. Never mind. So let's say from here, we're expecting, okay, first bounce, second bounce, third bounce, fourth bounce, price is going to go higher. So I'm going to react. Oh, as soon as I saw this, I'm just going to place a trade, put my stop loss, and boom. And yeah, would have been a good trade, never mind. But that's not just what I do, because this does not give a really good win rate. What gives a really good win rate is responding. And responding is like constant reading of price action. So it's like, okay, we got this and then we started falling. And after falling, if we close below this, then we are bearish, maybe a retest, and then we go bearish. Otherwise, if we are still above this, then we should see some kind of a bullish momentum for price to trade higher. And then I would vertically mark this and I would mark this horizontally as well. So I know exactly at the point that I'm going to look at reactions for. I'm just going to go to the 15-minute time frame simply, and I'm going to look for a reaction. So yeah, this is a pretty good reaction, to be honest. So as soon as price moves up, I'm not going to, this is where I use internal to external concept of liquidity, how to trade it. So basically price took this, dipped into this internal FVG, and now it's going to go to this external leg over here, liquidity over here. We also have low resistance liquidity. So I use few concepts just to, you know, explain things to you. And look at this. This 15-minute FVG price tapped into this and then started moving higher. So this is a confirmation, okay? As soon as we have expectations of something, we don't react, we basically respond. And respond is based on conditions. So our condition was, if price was actually going to go higher from this support, then we want to see a higher momentum, and then we can enter, because a lot of bearish side, or like a lot of bearish fair value gaps or bearish PD areas or order block, whatever you say, has been disrespected on the left side, and this becomes a clear drawn liquidity over here. So we can at least target this and easily take our trade. That's how it works. Now let me actually get back to you with the 3 candlestick pattern and how we can trade this. Okay, this video is already almost 9 minutes long and I was hoping to keep it quick, but I hope you guys have stayed till the end, because otherwise, also I'm again in one more gold short from here. Let's see how this plays out. I'm expecting a move down towards here, and at this point I'm just gonna simply go break even. Yeah, at this point I'm gonna go break even. So let's see how this goes. Okay, now let's just look at this. So on the 4-hour time frame, we can see, let me just put, this is one of, oh my god, this is so beautiful. Okay, let me just go to the replay mode and actually show you how I read price whenever I look at these things. We have a 3 candlestick pattern, and this is, to be honest, one of my favorite candlestick pattern in the 3-1. So what happens is, we see these kind of candles. Let me just mark it to you. Okay, this, and if I paste another, and this, something like this basically. Not something like this, exactly like this, I would say. Oh, bro, what the fuck is this? Drawing tool in trading view. And then this is like this. Yeah, so this, I really like this, because this means in the bearish market that we are going to go lower from here, from the 4th candle. In the bullish market, this means that we are going to go higher from here. But as I already told you, that this is a conditional way of trading. So from here, there's a 60% chance we might go higher, and there's a 40% chance we might go lower. Wherever we go, we enter from the middle of the range. I know this sounds a little bit sus, like what the fuck, who enters from middle? I know it sounds like that, but as I already told you in the start, we are going to get a lot of continuation candles from here. That's why it's called SFC, straightforward continuation. I hope it makes sense. So we're going to go like this, or either we're just simply going to go like this. What we won't do is we won't consolidate like this. Like we won't consolidate like this and, you know, reach till and still consolidating. What we do, we don't do that. Very rarely, maybe 5% time, but normally we don't do that. So let's see. Now here's the idea. Here's exactly how to trade this thing. Okay. How am I looking in this video? Okay, I look like a human being. That's great. All right. Okay. So look at this. Look at it like this. This is a 4-hour candle, right? This is a 4-hour chart, and we are expecting the next 4-hour candle to take this high, because it's a bullish 3 base model. Oh yeah, by the way, this is called this is the base model of SFC. A base model of SFC. And what is SFC? SFC is straight, it's not gay, okay, it's straight forward continuation, simple as that, straightforward continuation. That is what SFC is, and it is also great for taking very good reversal trades, because I mean, bro, I have done it multiple times, but I haven't been making content, I haven't been recording those, so I cannot show it to you. But obviously in future, when I get that, I'm gonna show it to you guys, and we're gonna have some fun with it, bro. Let's freaking go. All right, never mind. So from here, I'm okay, also one more thing. Oh, this is such an unstructured video, guys. I'm so sorry about that. I just told you that it's like almost 2:40 a.m. right here, and I have to take a bus in the morning. So I didn't got really time to, make a structured video. So I hope if you watch this 2-3 times, you're generally gonna get what I'm trying to say. And I promise you in future, I'm gonna make a pretty good series about it in a very structured way. Maybe I'll hire an editor. I won't. So yeah, let's see. I won't hire an editor properly, because I like this organic talk with you guys. That editor's gonna cut everything in the middle and it's just kind of breaking for fucking motion graphics every day. This fucking look bullshit. By the way, I was an editor, a freelance editor. Oh, fuck. Never mind. And yeah, let's see. We're already into 15 minutes, and I'm hoping we will complete this by 20 minutes. So this is gonna be a 20-minute video. Everything you're gonna need. Fuck. Did I just said everything? No, not everything. Just a quick. I talk too much, bro. What the fuck? Okay. So now this is the thing. If I go to the 1 hour time frame and I'm expecting 4 hour to be bullish, then there are going to be 4 1 hour candles, right? 4 1 hour candles, as simple as that. So if there are going to be 4 1 hour candles, at the end, price has to close above its open of the first candle. So this is, let me teach you if you don't know about this, because some of you might not know, and I understand that's fine. So here's the thing. This is a candle, right? And this is a bullish candle. So at whatever time frame price opens, this is how it first of all looks in the first few seconds, like this. There is no this, just simply that. And when price goes a little higher, it becomes green because it's higher from its own open. So it's green, and it's, let's say this is 4 hour candle. So in the next 4 hours, if it closes above its open time frame, above its own open, that candle becomes a bullish candle, simple as that. And what happens when this candle closes below its open, and the open time is this, by the way, okay? And open time is always the fixed one. The close time is what moves between the time frame when price actually closes, or the candle actually closes. So as soon as it goes even a little bit below its own open, you can see it becomes, it didn't become red, what the fuck? You can see it becomes red. And as soon as it goes above this open, it becomes green. And this is how price actually moves. So it's like it opens, and then it might come up, go down, come up, go down, come up, go down, or whatever it's gonna do. And then eventually, if it closes below its own open, then this is how this candle might look like. So this is the open area, and this is the close area. And because it closed below its own open, so it's a red candle. And then this is the high of this candle, like the highest point in that 4 hour where price went during this trading session. And then the lowest point is going to be like this. So this is how this candle is going to look like. So this is the idea basically. Now it's going to be very clear to you what I'm going to explain to you in here, okay? So this is what we are going to do. We are expecting the 4th bullish candle, because we always trade the 4th. We never, in the 3 candlestick pattern, this is one of the very important rules. We never trade the 3rd, 2nd or 1st, whatever. We only trade the 4th candle. Only trade the 4th candle, okay? And it might even be scenes like where, the 4th candle is like this, and then again a smaller candle like this. That's fine. That's fine. That's still a part of SFC. The whole structure is still a part of that. It's really fine. No worries. My whole point is that we trade that continuation from that open of the 3rd candle. Oh yeah, this is a better sentence. All right. Now we're expecting the 4th candle to be bullish. So what do we do not want to see on the chart? Let's do some cautioning. We do not want to see price to be bearish. If we see price to be bearish, and if we see it continuously to be bearish, then we enter in a bearish trade. If we see it to be bullish, then we enter in a bullish trade. And we don't enter on the 4 hour time frame, because then it's already too late. We enter on the lower time frames, either on 5 minute or 15 minute or 30 minute or 1 hour, depending upon where we find a good structure and a good end. Wow, that was a bad one. Depending upon where we find a good structure and a good entry. If I forgot to edit this, then this is going to look really embarrassing in the video, by the way. Okay, so let's now go to the 1 hour time. fuck. Let's now go to the 1 hour time frame, and here we are only gonna wait for 4 candles, right? Maybe not wait, but actually wanna see what price gonna do. So this is the open. If price stays above this and give us a good entry, we can go long. If price trades below this open, because the next candle almost always opens at the close of the previous candle. So you look at this. So this candle opened here, then closed, then opened here, close, opened here, close. So open and close of these 2 candles are always near, until unless there's a very huge gap or weekly ranges, or not weekly ranges but weekly opening gaps, something like that, which you can also see in in indices like Nifty and all of that. So yeah, so normally candles move like this. So what I want to see is the next 1 hour candle to either go lower or trade a little bit higher and then go lower and things like that. So let's see what happens actually. Okay, next, okay, it goes lower, next it goes higher, next, okay, and next. Okay, so on the 4th candle we saw that, all right, this 4 hour candle did not went up. This is your first sign, by the way. This is your first sign that this is turning into a bearish trade and not in a bullish trade. So if you go on the 4 hour time frame, you will see that, okay, this is how this candle looks, and this is actually a good sign, trust me. This is how this candle look. It tapped into this 4 hour FVG also, if you can see over here, and then it's reacting. Like if I go to the 5 minute time frame, you can see the reaction is really decent reaction, and from here it took this liquidity and then went down. So you can see that there is already a good bearish momentum. So you can lean bearish a little bit from here, obviously. And what you're not going to do, you're not going to look for longs. Okay, that's it. You're not going to look for longs from now. So yeah, let's see if we get any short entry over here. Okay, so now we are going to do an internal to external. Can I explain this internal to external in this liquidity in this video itself? Okay, let me just quickly explain this very quickly. Okay, so for that I'm simply going to open a Bitcoin chart. Let me just open the Bitcoin chart on Bybit and just erase everything if there is anything. Let me go to the weekly time frame of Bitcoin. Time frame doesn't matter, by the way. Okay, time frame doesn't matter, it's just a concept. So internal to external liquidity, any fair value gap is internal liquidity. Okay, just basic. I mean, there are a lot of other internal liquidities, but for the sake of this video, let's keep things short. Any FVG is an internal liquidity, and price moves by taking liquidity to liquidity in the market. And any swing high and swing lows, is external liquidity. So how price, what the fuck? So how price moves is price taps into these internal liquidities and then goes to the external liquidity to rebalance it or take it or whatever you want to call it. And then again, it's going to create an FVG. So price taps into the FVG and goes back again to the external liquidity. So this is the concept of internal liquidity to external, internal to external. All right. So let me show it to you on the Bitcoin chart. As we can see, we were going higher, and price tapped into this bullish FVGs, tapped in, took the external liquidity over here, right over here, you can see that. And then price created another internal liquidity, took this, and then took the high. And then we eventually shifted to the bearish, and then look at this, tapped into this internal liquidity perfectly, and then it took these lows. By the way, I took these Bitcoin shorts as well. And then again, we came back to internal liquidity, and then we took external liquidity over here. So you see how easy this is. This is like so freaking textbook. Bitcoin moves such imperfection with this concept. And let's go back. Oh, it was not fast, like it was cold actually. So let's go back here. And now on the 15-minute time frame over here, we're going to look for an entry, and that entry is going to be based on this concept, and the concept is internal to external liquidity. And then we're going to enter short over here, right, somewhere around here, and then we're going to target this low. As simple as that. Either 1:1 or 1:2 or whatever you want to freaking trade. All right. Now, before we do that, just one more important thing. And by the way, this is a quick video, bro. I'm so sorry. This has been so long. I also have to sleep for at least 3 to 4 hours before my train or the bus is gonna arrive. But never mind. I don't want to make a quick video and then you still have doubts about it. Okay. So you might still have doubts. You can still ask me. But I'm gonna make a very good course on this. Not a paid course, obviously, but a course on YouTube that I can simply put in a playlist. So you guys can watch it for free and learn trading for free. I just freaking love helping people. I'm so grateful in my life, guys. So grateful. So I hope a lot of you guys become successful as well with me. Now, over here, we have to mark a condition in which we say, okay, if price, we have a bearish bias right now. Why? Because the fourth candle on the 4 hour did not close bullish, it closed bearish. Plus, we also saw how price was reacting to the 5-minute time frame after it swept the, after it went into the higher time frame FVG and shit like that. Wait, let me just check, I forgot. Yeah, so it went to the 4 hour FVG over here. So remember the concept I told you about, from internal liquidity to external liquidity, right? So now this was supposed to go higher, but it didn't. Now we have to put a condition. Okay, the condition is if price closes above this, then our bearish bias is gone. Then we are going to look for longs. Simple as that. But if price keeps trading below this, then we can simply target this low over here. So let's now go to the lower time frames and let's look for entries. There's nothing about this. This is so freaking easy. Okay, where do we have? We have our internal liquidity over here. Is price gonna come in here? Let's see. If price comes in here, we can actually short this. Simple as that. Nope, did not come here. That's fine. Already took this. Okay, and also you can see simultaneously we are also disrespecting these bullish fair value gaps because we are already in the bearish movement on this market. So yeah, we're gonna disrespect these, and because this is a 4 hour, so we are assuming that yeah, it's just gonna freaking go lower and lower. So we just have to wait for that entry, and yep, here we have that entry over here. And if you go to the 5-minute time frame, you can see, okay, let's see, okay, come up a little bit, it's fine, no worries. And no worries, we can take these highs, it's fine, it's just liquidity sweep. And then you enter over here after a liquidity sweep happens. See, that's why I told you, this is just a quick video on letting you know on how we can actually use this, and not about like a proper video on how to use this. And let's just freaking run this. Oh man, too much heat over here. And then boom, wait TP. Yeah, so that's about it. Ideally, realistically, I don't take trades of 1:37 RR. I don't really need that, because a lot of time it's gonna just simply come and hit your stop loss, and that's gonna fucking ruin your mindset. Because as I told you, on the 4 hour time frame, let's just go on the 4 hour time frame, and you can see how beautifully price directly went to these lows. It did not consolidate, it did not stop, and it's 7 a.m. in the morning. Like, this is the kind of movement SFC gives you and teaches you. 7 a.m. in the morning. It's not even a New York session, not 9:30 New York session open, and in the IST time, not 7 or 8 p.m. New York session open, nothing, just 7 a.m. Almost the Tokyo time, I guess. I don't even know, not even that, but yeah, definitely the Tokyo time. This is the kind of movements we get when we identify an SFC pattern. This is the powerful thing about SFC. And because we get this pattern, we can actually short this till from one point A, which is this, to another point B, which is this, and enter in the middle. And it's really fine because it plays out most of the time. So this was a short video of 26 or 30 minutes. I'm so sorry, guys. Fuck this shit. I hope you all understand this. And if you have any doubts, then let me know. I am most definitely gonna create I'm most definitely gonna create a lot more videos in future, and in a lot more detailed manner. I'm gonna cover a lot more concepts that you guys would absolutely love. So yeah, just freaking, by the way, just go and backtest this, okay? Do not use your real money on this until or unless you have a hang of it. I would say at least 3 to 4 months. Or see, trading takes time, bro. It's not gonna be like you're a millionaire in 1 or 2 months. It's gonna take some time. Do not do this in the first trade. Do not risk your money. I cannot urge you enough, because I know for a fact, because I haven't explained you all of the things, I know for a fact you don't know this concept here. Do not risk your money. Simply do demo trades, observe, build intuition, build discretion, and then only take those trades. If you risk your money on this and you lose, you're going to be hungry, because you won't have any food to eat. Bro, that's bad. Oh, that's like below poverty line, bro. I think I'm going to have to cut this part probably, because this is, yeah, internet sometimes can take a joke, so maybe. But yeah, I hope you guys get that. And very easy. Let me just summarize everything really quickly. Let me just like show you very fast on how we can do this on other coins as well, not the coins but other patterns as well. So let's just go blah 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 blah. Let's see if we get any SFC. Okay, here we have it, 3 candlestick pattern. We are falling, but this acts, by the way, this is what I call a base candle. I already have this covered in the PDF that I gave you, so just go and read. So from here we're expecting price to go higher. This is the open and this is what we are going to target. Now we go, just repeat it with me, we go on the lower time frames, we expect price to go higher. We are on the 4 hours, so the next 4 candles on the 1 hour are going to be definitely going to should and bullish. So let's see what the first candle does. The first candle bearish. This is good because this is marking the low of that candle, and when it turns higher it's gonna just simply go bullish. This is good. So we don't judge it on the first candle, we judge it on the 3rd or 4th candle. So like this and this, and let's see, and let's go to the another 1 hour time frame and let's see what it does. By far our bias is like, okay, we are going higher, okay, we are going higher, this is our bias. So we enter at a good opportunity on this. Let's see. Oh boom, look at this. This is actually great. We almost lost it. But as I mentioned, if we go on the 15-minute time frame, you can also see, oh my god, this is so beautiful. You can also see there is again a 3 candlestick pattern, guys. How many times do I have to show you this? And those 3 candlestick patterns are over here, over here, over here, over here, over here. Bro, over here a sell pattern, really good one, but just 1:1 for that. And how do you identify which pattern is going to work and which isn't going to work? Another video. Can't teach everything to you in this singular video. So yeah, as soon as I got this, and especially this leg up long, so I'm just gonna go long over here, right over here, because we're expecting, let me just go on the 4 hour time frame. So see, if I'm being very honest with you guys, I would not take this trade. And because we have already taken this high of the 4 hour candle, so our targets are, I obviously told you, our targets are like these candles, the high and lows of these 3 candles, right? The highs and lows, these are our targets. So in this we can actually see that our target has been taken, but this is because I on the 1 hour time frame I simply like did that. But if you were to enter on the 5-minute time frame, you can actually get really good targets. I think this is New York Open, yeah, New York Open or pre-market open. So you go on the 15 minutes, let's be honest with each other, and simply select a bar, because as soon as you got this 3 candlestick pattern and you got this momentum and it's a New York Open, we are going to go higher and first take these highs, and then we can do whatever the fuck we want. So you keep your stop loss here because you're expecting really good momentum. Simple 1:1 trade, and TP, that's it, nothing really hard. And then price can do whatever the fuck it wants to do. I don't even give a shit at this point because I've already taken the piece of my pie. And yeah, so this was about it for this video, guys. I hope you understand. See, this is also very easy. I already told you guys, either it's going to go higher from this point or either it's going to go lower, and we just go on the lower time frames to identify what it might do, and if it gives us a bearish signal or a bullish signal or whatever. There are basically conditions. I'm going to make a different video about this. This is like, oh my god, this is 30 minutes video. Holy shit, bro. Okay, I hope you guys watch this fully because you're going to understand a lot of things from this video. And then we go down. So it's like I always told you, two-way trading. So from here, this was expected to be a bullish move, but oh, I'm sorry, I just called. I don't know if that what English means, and I won't be able to edit a lot of my stupid things in a video, bro. What the fuck? I'll have to literally probably watch every single word that I'm speaking. Blah, blah, blah. Okay, so from here, and then okay, this is a really short time frame for that candlestick. Let's go here, and yep, this is good. This looks good. So this is a bullish pattern. I think you all already know. I think this is called the twinkle star, little star. How I wonder. Okay, not that. This is kind of a star pattern. I don't know, bullish something basically. I hope you already guys remember this pattern. I don't know why do I forget the name of this. And then this, and then freaking this. Okay, so this, and we go higher. And I guess this, I don't know, bro. Could be any color. In this example, it's black. So this is, and then we go higher. So this is a bullish pattern, but our bullish pattern got price closed below this. So we simply enter our short over here, And this is a conditional way of trading, two-way trading. So either it's going to go up, either it's going to go higher. You can target these low 1:1, or you can book 80% and let the 20% run to the ultimate take profit, or however it can go. However it can go, doesn't even matter. So, yep, that's the recap. That's everything. You look for 3 candlestick patterns. For now, you simply observe the markets and you see how it's going. And that's about it, bro. I'm too tired to even recap this again, because today's trading session was also decent, to be honest. Not bad. Yeah. So yeah, this is just simple. Like, you identify the 3 candlestick, and 4th one is expected to either go higher or either go lower, depending upon the candlestick pattern, which one this is. I'm gonna write a PDF on this and send it over to you guys on the Telegram. And then one-sided momentum is gonna enter in the market. One-sided momentum, very beautifully one-sided momentum. You go on the lower time frames. For example, in this one, you simply went on the lower time frame, let's say 1 hour, 15 minutes, and then you look for internal to external liquidity sweeps, and then you enter one of them and simply target these lows of the different part. And this is the strategy. That's it. That's how you use that candlestick pattern. And if you have any doubts, all of you have my Telegram. You can message me. I'm going to reply to each single one of you, because I'm here to make money with trading, but I'm here to help you guys as well and build a really good, beautiful community with beautiful people. And man, I'm so happy I'm doing this. And I wish you guys best of luck. So yeah, this is about it for the video. This is a very quick recap of how I use these 3 candlestick patterns, SFC base. Read all the PDFs that I'm sending you. Trust me, it's gonna help you a lot. So yeah, I'm just gonna go and maybe catch my train, because it's too late. Freaking hell, bro, I have to sleep now. All right, guys, let's freaking go. Bye-bye.